Well, hello everybody, I'm L.A. Little, and this is your daily NeoTA wrap, where we take a look at these markets. We do it from a neoclassical perspective, each time asking ourselves just that one question: what happened today, and what does it tell us about the coming days? Do this show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel L.A. Little. Also do a show on weekly show. It's on Sunday nights, same time. And you can subscribe to any of these over at YouTube. Just hit the subscribe button. Anytime you do that, of course, anytime I push charts, content to the channel, then you'll be notified. And man, talk about notification. You definitely wanted to get notification last night because we were talking about that push up, those sectors telling us last night we were going to sell down. You don't always know how far it's going to sell down. Sometimes you can project that it has the potential to be big, and sometimes you can't. You can just tell that, the setup, the tea leaves, if you will, are telling you that, you've got some downside pressure coming. And that's what we were looking at last night. There was no way for us to know, or at least not for me, to say with any kind of certainty that you were going to get this kind of a sell-off. But boy, did you get the sell-off. It opened up slightly. We had that, I talked about Europe probably going to open up, try to test those highs and fail. That's exactly what they did. I talked about the sectors here in the States going to pull us down because the indexes weren't telling us that. And that's why you look at all of this. You look overseas and you look at the drivers that are driving the indexes themselves. And it's when you get that comprehensive picture, then you can put together the story, you can put together the tell. You can do the neoclassical analysis and say, okay, this is where the probabilities are telling us this thing's going to go. And of course, that's what we did last night. So we had a big down day. What do we got here? 1.6% here. The NDX was taking it because it was taking heat everywhere. It was taking it on the biotechs. It was taking it on the stocks. It was taking it on the big cap. The only one it didn't sell off hard was Apple, and that's because Apple's already sold off hard. And so, that was kind of the story there with respect to what was going on. Elsewhere, you had a little bounce in your commodities, money rotating to someplace that is already beaten up. Oil took another hit today. Oil's down at new lows again, and we had a little bit of weakness in the dollar. All right, let's go take a look at what we got tonight. And I'm actually going to start with the sectors that we talked about last night. So when we were looking at these last night, I spoke about the XLY, for example. I spoke about several of these and said that they're going to have trouble. This one comes down hard, has volume, right? Comes down, tests this low, right? Bounces off of there, but has the volume. This is going to come right back. It's going to try to get into this bar, and it's going to try to knock it out, right? Because it's coming down there with about the same amount of volume. I think you're going to hit it again tomorrow and see if you can break it down. That's the consumer discretionary. And let's also note here that we have employment numbers in the morning, and that's going to set the the tone for whatever happens early. And I have no idea if they're going to be good, they're going to be bad. My expectation is they're going to be good, and that's probably going to be bad. And what I mean by that is you've already gotten 2 strong numbers this week economically in the U.S. If you get an employment number that is strong, then that's going to kind of cement the deal in people's minds about the Fed moving in September. And I don't think people have totally priced in a rate cut, or actually a rate increase in September. So that's how it's going to be bad, even though it's good. If you look at healthcare, right, we talked about the biotechs getting hit. Well, just look at healthcare itself. It's just totally waxed. And if you look at something like, say, pharmaceuticals, same sort of thing, right? Big, strong downtrend or down strike. Biotechs, we talked about the biotechs failing last night at that low, at that swing point high there. Actually, it wasn't a swing point, it was the breakdown bar, right? So it went into this and it failed on that bar last night. What does it do? Comes down, volume expands. Gets down here, is going to attack the low, has more volume than the low. That looks to me like it can test all the way into this bar's low, which is not that far away. Biotechs can take some more heat. Transports, we talked a little bit about the transports, said they weren't going anywhere. We actually talked about the stocks and said if this thing starts breaking down, we're going to have some real problems. Well, it's starting to break down. It's going to go after the swing point low tomorrow. It's already going after the swing point low on this time frame and going back into the big breakdown bar back in October of last year. Financials we talked about would break down. Oh, look at this one, consumer durables. This was a bearish engulfing at the highs. That's not something you see very often. So the sectors themselves, were the giveaway last night, and boy, did they give it away. They told us exactly what was going to happen, even though they didn't tell us how bad it was going to be. They certainly gave us the heads up. Let's move over to the indexes, take a look at those, and let's start with the S&P. So the S&P comes down, volume expands. It's coming back into this big bar. Volume there was more 44.5 versus a 42. The top of that guy is 2083. We close it at 2083.56, and here it was 2083. I think it was 74. So you close just barely inside that bar, and that looks like it's going to attack it again tomorrow. Now the one that's really fallen out of bed is the Dow. The Dow's coming down, testing a low. Didn't have the volume today, so that's actually a hold at the lows. Could get a bounce off of that in the Dow. If we look at the NASDAQ comes down, right? Big breakdown bar again. And we've seen these breakdown bars before, and each time they tend to give you some sort of continuation. If not immediately, then after some sort of a bounce. I mean, if we look at it, the breakdown bar here, it was continuation immediately. A breakdown bar here, right? You got the bounce, then the breakdown, right? And so those breakdown bars have been pretty good clues when they come that you are going to see some more downside pressure, whether it's immediate or later. Looking at the Russell came down with volume, didn't hit the bottom. The Russell is juxtaposed against the Dow. This one says it's going to try to test those lows again. It's not done. So we have weakness in the indexes. We still have weakness in the sectors. The employment number is going to give us the move tomorrow, and that could be a small bounce. But these setups here portend for lower prices to come, whether that's immediate or whether that's next week. Now, what may give us a little bit of a signal tonight that would tip the boat towards the downside is the failures now that did take place today in Europe. We had talked about, last night I'd said that more than likely what you're going to see is you're going to see these push up. They're going to try to get over this, and continue the push, but they're probably going to fail. And that's exactly what we saw, right? It came up, got over it, back below it. It's very close to a 2-bar reversal. That says we're probably going to get a sideways day at best tomorrow or down. If we look over at Germany, it's the same thing. Goes over, back under, less volume. Also portends more down. Looking at Hong Kong. Hong Kong is back into that bar now. The top of that bar, the big bar at the bottom. The big bar at the bottom is, what do we got? 24,411. And we're into the bar now. So not much, but we're into it. If you stay in there, especially on a weekly here, if you stay in there and get underneath this swing point low tomorrow, that's going to try to drive next week down to the lows. So tomorrow, big day probably in Hong Kong, and it will be the same in the Shanghai. Shanghai's just can't lift. I talked last night about this chart looks precarious, and it still does, hasn't changed. And then finally, we don't look at it much, but look at Taipei. This market cannot find a bottom. And a lot of this is China, a lot of this is chips. Breaks the bottom. It's on the weekly now. If it holds down here tomorrow, you got a break of the October lows in what is somewhat of a major market in Asia, the Taipei. So the SEC weighted index. Okay, so what do we got? We got employment numbers tomorrow. We've got what looks to be more pressure coming in Europe and potentially in Asia. That's on the heels of what we saw tonight in the U.S. It looks to me like that employment number is probably going to be good, and we're going to get more heat here as a result of it. If I had to lean tonight, I would be leaning to the short side. I told my members that today, late today, that was the setup, and that's the way they ought to be leaning if they want to lean into something overnight. Thanks for joining me. Have a great one. Take care. Tell a friend, folks. Tell two. I'm LA. This is and was your daily NeoTA wrap. And if you've read my books and have yet to, go over to the Amazon or some of these other places, and I'm asking you, just as a favor, take a few minutes, write a review. It helps others see what I do. It helps others to, make some evaluation of what these books are and what they offer. And if you've read them, if you think they're worthwhile, then I would encourage you to, make a suggestion, do a small review, and let others know what you think. As always, thanks. Take care, and I'll see you next time. Good night.